Chris, you are from BitPay. Can you please, because I talked about BitPay as a means for merchants to implement a Bitcoin payment without actually having to adapt to Bitcoin. Can you please tell us what the acceptance rate of BitPay is and if there are specific types of companies who are into accepting Bitcoin payments by BitPay?
Yeah, thank you, Benjamin, and it's great to be here, and it's great to be on an amazing panel. I've really enjoyed listening to some of the bullshit stripped away from the talk around blockchain. You know, the amount of companies and financial institutions and PSPs that are already connected to blockchain really should not be underestimated. You know, I see a few empty seats here, and I see a few sore heads. Who managed to get to the awards dinner last night? Maybe a show of hands? Yeah. One or two people, okay. The Innovations Award last night was won by a really great business called Much Better, which is a leading e-wallet. They're one of the many, many companies that if you log on with Much Better, you can deposit in real time with cryptocurrencies. You know, out there and that in the conference hall. I mean, I very much agree with my colleague here just now. A lot of the PSPs are already indirectly allowing merchants to accept Bitcoin. So out there, and potentially in this room today, Wirecard, PPro, eMerchant Pay, PaySafe Group, you know, fintech giants are embracing it. But to answer Benjamin's question directly, there are no limitations as to what types of businesses wish to accept Bitcoin. From us as a Bitcoin processor, our limitations are around low risk and high risk. We partner with ING, the tier 1 Dutch bank. So obviously our approach is towards a low risk, and businesses I've seen accept Bitcoin include, I was chatting to Dave beforehand, airlines such as Air Baltic, the flag carrier of Latvia, LOT, the Polish airline, Far Asia Travel, Singapore Airlines power their loyalty program on the blockchain. You know, there's many, many real user cases. I mean, people can order, we talked about pizzas, takeaway.com, one of the biggest takeaway businesses in the Netherlands accepts Bitcoin, and they do many, many transactions with people buying pizzas and so forth with Bitcoin. There's ecosystems that come into contact with the circles of trading, such as gold brokers. The possibilities are really limitless, and you know, some of the stuff that Cassie and Ripple are doing is so exciting, and we see not so much, to a certain extent, cross-border. We see a lot of business to business, so which is companies invoicing their clients and the clients paying their vendor with Bitcoin. And just for the last point I wanted to talk about was just how massive the crypto industry is, the sheer amount of development in place, the sheer amount of headcount that the mining companies have, and all of that ecosystem, they're using the cryptocurrencies as their primary payment method. And any supplier to these industries, the software suppliers, they're travel companies. I know Flight Centre, the major travel agent with 20,000 staff, they accept Bitcoin from this type of industry. So it's fascinating, it's only growing, and it's already incredibly connected to the world of traditional fintech.
Thank you, Chris. Tadas, you are quite invested in the blockchain space. Where do you see the most adoption of using cryptocurrencies for payments? And what do you think has to happen that merchants will really get into accepting cryptocurrencies and blockchain in payments? So what would be considered a leapfrog in this?
Well, cross-border e-commerce will reach $1 trillion next year, right? Even small online merchants are selling globally today. At the same time, PayPal, one of the preferred payment methods today, would charge 3.5% mandatory currency exchange fee, would freeze 10 to 30% of your revenues for up to 180 days, would actually make unpredictable decisions, which holds up the money for you. And for a small merchant, basically can be a death sentence. Obviously, there is an opportunity here for improved cross-border transactions, right? for online merchants. And we see Japan, South Korea taking a lead globally in cryptocurrency adoption as payment methods in retail. We see Venezuela, out of crisis rather, maybe not the best example, also adopting cryptocurrency, Dash in this case, very fast. But we are not seeing so much of the rest of the world joining this move yet, despite that we have Bitcoin around for 10 years now. Why? For many rich customers around the world, the payment methods are comfortable enough. So it has to be way cheaper, at least as comfortable, for cryptocurrencies to become competitive in the payment market, to my mind. Obviously, the lower cost can be delivered, but the complexity currently and familiarity are very low. And to my mind, these are the main challenges that are going to take still quite a while for including Dash, Litecoin, Ripple, other cryptocurrencies, deliver the solutions that customers worldwide would feel as comfortable with as with PayPal in many markets today.
Anyone wants to add to that?
I think the number of merchants accepting Bitcoin is going up, but that's marketing. I mean, nobody's actually using Bitcoin for transactions. When you go to a store, I went to a game shop the other day, and they have a big thing where we accept Bitcoin. And so I thought it would just be fun, because I have a wallet. So I thought it'd be fun to pay with Bitcoin. And the guy in the shop forgot the password for his Bitcoin thing, so I couldn't. And so I said, how did you forget the password? Because how long have you been accepting Bitcoin? And the guy goes, well, about 6 months. So how many people pay with Bitcoin? He goes, you're the first. So you have a merchant, they have Bitcoin in the window, and good, but that's marketing. There are no customers using Bitcoin. It's only used for speculative purposes.
I think Dave is very pragmatic and in many cases very, very correct. There are some companies out there that almost see adding Bitcoin or Litecoin as a logo onto their website, as having prestige in the same context as we put, you wear an Armani eagle on your jumper and you look super cool when you go down to the local restaurants. And certainly on the point of sale in a shop, it's hard because using a credit card, it's so much more convenient. It's who would really at this present moment in time want to pay for a coffee with Bitcoin. However, it's interesting talking about computer software. I mean, we work, to say that the blockchain industry, power companies like Newegg, which sell online computer software. It's a very large company out of America. And I believe they're doing a regular 6-figure transactional amount from cryptocurrency on a monthly basis. But that's online. So that's the key distinction that I agree with Dave on.
Actually, cryptocurrencies were created to transact online. That's why I'm not really surprised that, that there is a low amount of point of sales, actually, that accept Bitcoin or other cryptocurrencies. I disagree that no one is using cryptocurrencies because my plane ticket here was paid by crypto, my hotel here was paid by crypto. A week ago, I bought tire chains and meat grinder using crypto. So
Bought your plane ticket with Bitcoin?
Sure.
And you're insane. Only a madman would do that. On Monday, we had an airline go bankrupt in the UK, Fly BMI. Everybody that paid with a credit card will get their money back. Everybody that paid with cash, checks, old gold, cowrie shells, Bitcoin.
So what?
No, only a crazy person would buy an air ticket with Bitcoin.
I disagree.
You are crazy.
Responsible person would use cryptocurrencies. I know that many people, you need to also understand when you are starting using cryptocurrencies, you need to understand that with all of this freedom comes the responsibility also.
I don't want responsibility.
Yeah,
Nor do
you don't. I do.
This is a Bitcoin pseudo-libertarian fantasy. Consumers don't want responsibility.
I know.
I want a bank that I can sue to be in
And
charge of
what
things.
is happening when the bank is falling
If you disappear
down?
with all the Bitcoin, what happens? You're gone.
What happened to all of these people on Cyprus or Greece?
What?
Okay, Robert, can we stop the philosophical discussion?
Bitcoin and
Do they have access to their money?
Robert?
If you disagree with the actions of a democratically elected government, the solution is to change the government, not just to allow rich people to hide their money away
Are
somewhere
we talking
else.
about governments or banks? Those are two different things.
No, they're governed by the rules.
What-
The banks don't make the rules, the governments do.
look, neither Bitcoin nor Dash nor Ripple will disappear, right? They won't
Ripple's not going to
disappear.
disappear. Are you going to take that sitting down?
But
Ripple's not going to
But Dave has a good point about the finding a new balance between clients being in a very comfortable position, like today they are with PayPal, where you can dispute a transaction, charge back very easily, and then merchants on the other side, on their side, actually suffering in this situation and looking for other solutions. I mean, there is one large merchant here in the conference that have just dropped PayPal because they just had enough. And though they lost a little segment of their clients, they have calculated they're going to recoup over the next 3 years just by basically not using PayPal ever again. So I think that the balance may be tilting with the cross-border transactions increasing in the total trading bag. If you want to sell to China, to the clients in China, India, etc., the fiat settlements are horrible, and cryptocurrency comes in very nicely. You just have to get used to the service and lower your sort of demand standard as a customer.
Sure, there are also usability issues with cryptocurrencies. There are legal issues, so there is a lot to work on before it's becoming a really useful payment method, right? And no one is saying that it's perfect now. We as an industry, we can see that there is a lot of things to improve. And simply because of those things do exist, cryptocurrencies are not being used on daily basis right now, but it doesn't mean that there is no opportunity to make those improvements and being adopted, right?
Were you here on day one of the conference? No. Because on the afternoon of day one, there was a presentation from IATA on IATA Pay, and I think what you'll find, I agree with you, merchants have every right to be annoyed with the payments industry because in some cases, market organization pressures have led to prices that are above marginal cost. And so the merchants can say, there's not enough competition, that's true. But for the merchants here, I guarantee you what they heard from IATA Pay and what they heard from the open banking guys and what they heard from the PSD2 PISP is quite, so if you're a PISP, that's a kind of TPP, you can use SCA2FA to do an XS2A ASPSP.
Cool.
Thank you very much, Dave.
You're supposed to be writing this down, Robert. So, but for the merchants here, to be completely honest, they're much more interested in instant bank transfers because, you know, we're talking about Western Europe here. We're not talking about Venezuela.
I think instant bank transfers are great, you know, and the stuff for Trustly and so forth and Token have done, the open banking. It's amazing, you know, and I also think the cryptocurrency space is potentially a blockchain space should be viewed as another powerful, pertinent, alternative payment method alongside those other ones that Dave is mentioning. You know, but the largest in context, it's a growing space, as we all know. The largest Bitcoin merchant processor for the last 2 years processed over 1 billion of deposits, which is no small amount. I mean, as an APM, Bitcoin is global. It's not regional. The market capitalization of cryptocurrency is, yes, Cassie and you know, and the guys from Dash can tell you, it's in excess of 100 billion. And we're only sort of scratching the surface at the moment, and it's not perfect. And for all consumers, the lack of chargeback protection is a negative. For merchants, it's a positive.
Okay.
I don't want to say about any specific cryptocurrency like XRP or Bitcoin, but calling it a market cap is a gross abuse of a term that has very specific meaning in financial services. Multiplying the price of the the number of Bitcoins out there by the price of the last transaction, it's not a market cap. That's a, it all bothers me as much as
You're right.
contracts.
You're right.
Sorry,
I
will
hate
shut up.
speculation.
I apologize, Cassie, just
To be honest.
it's the borderline autism of the male brain. You have to understand this.
We've seen some really interesting use cases come to light around being able to settle merchants quicker using Ripple's tech. So if a PSP could offer instant settlement per transaction or some sort of pre-fund using Ripple because the transaction is happening in real time, that's a real big win for merchants.
Oh,
Hello.
I could hear you perfectly.
Now repeat. No, we've seen some really, really interesting use cases come to light over the last 6 months or so for Ripple's tech, and it's around PSPs, acquirers, being able to settle merchants much quicker using Ripple's technology. So that kind of, being able to settle per transaction is potentially something that could open mass opportunities for merchants in terms of cash flow. But not only that, we've seen big marketplace players that are able to keep sellers on their platform by offering them a diverse payout method, i.e. upfronting the cash using Ripple's tech in real time rather than waiting 3, 7, 10 days. And that's been able to give them a strategic advantage over other marketplaces that are offering, much poorer timescales of getting payments out. And I think that those kind of use cases are something that we're really interested in. Supplier payments, on-demand payments, is kind of where we see Ripple really making headways in 2019.
Cassie, Robert told us that he sees one use case of Dash in being international remittance, but this is also the use case for Ripple. What do you think is better, Ripple or Dash for international remittance? And why?
I think we're focusing on two different markets. You're kind of focusing on the consumer market. We're focusing on enterprise software for businesses. We have financial institutions transacting a lot of cash through Ripple's ecosystem now. Focusing on, we have 40 countries live, but the emerging markets are a real strong point for us, so Southeast Asia, India, etc. It'd be wrong of me to sit here and say, hey, Ripple's better than Dash, but there's definitely a market for both of us. There's definitely opportunities for both of us, and we'll continue working very much in the enterprise solution space.
If you also said that most business things or suggestions you heard are not based on the blockchain, but blockchain inspired or stupid, one of those things. Even if in one of your good ideas, like using the blockchain for value transfer or value storage, there is a question from the audience, the possibility of a 51% attack. So do you think this is basically a huge problem for using blockchain as a means of...
I should say to the audience, first of all, so the 51% attack is something that very specifically applies to proof-of-work blockchains like Bitcoin. So the idea is, unless you control 51% of all of the energy in the known universe, then in theory, your blockchain could be attacked and could be reorganized. And, there's some evidence that, I'm not an expert on astronomy, but astronomers tell me that 97% of the energy in the universe is in the form of dark energy that they can't find. So I assume that some other alien civilization has already discovered Bitcoin, and they're using all of the energy in the universe in order to keep their chain, which means we could never catch up, basically. So it's very problematic. But it doesn't apply to the kind of things that I was talking about, like JPM coin and so on, because those things aren't proof-of-work blockchains, nor is Ripple. So the 51% attack applies to a very specific type of shared ledger that's implemented using a very specific type of blockchain. But of course, no sane person is going to move the world digital asset markets onto a permissionless ledger that could be attacked. It's just not going to happen. So yes, it's the theoretical attack, but it doesn't apply to the token markets that I was talking about.
But it would apply to Dash, for example, wouldn't it, Robert?
It would, and we see it as a threat. That's why we are releasing very soon, this quarter, solution to this called chain locks. It will prevent the 51% attack because, you know, we closely monitor the market and it did happen, right? Ethereum Classic has been attacked. Some other coins, I don't remember. I don't want to point exactly just the recent event what was with Ethereum Classic. So there is a problem. It's not easy, although, to attack proof of work with proof of work network with 51%. But sure, it's a problem, and we need to address this problem. As I said, there are problems to address before.
It will remain difficult in the future because at the 51% attack, you know, until quite recently on Bitcoin would seem very difficult because you had these giant mining pools that were all working together. But as Bitcoin evolves, it's quite possible that you'll see this collapse of the mining pools down into a much smaller number of miners because of the cost, because it becomes less profitable to do it. And then when you have smaller groups, then all of a sudden maybe you have all this mining equipment now on the market that's potentially available to third-party state actors. I have a feeling, you know, we need to worry in the future it might get easier.
I think that you have a kind of tendency to elaborate about negative sides of cryptocurrencies. And
Me?
Yeah.
Very uncharitable reading of my comments.
Of course, there is a kind of probability of this is happening, but on the other hand, it's the future. It's difficult to predict. It could be something completely opposite. You know, it's always the market which regulates that. I'm pretty sure that there are smaller companies working on mining solutions that will.
Anyway, the 51% attack doesn't really matter because in a couple of years' time we'll have quantum computers. The quantum computers can steal all of the bitcoins.
No.
So
it's really easy to prevent quantum computer attack.
A third of all the bitcoins that have ever been mined are already lost, right?
Which is great for the holders who
they
still
will
have.
preserve the code like this. Of course, it will be easy to attack. But I don't believe that.
Okay, Robert, Dave, can we interrupt you here? I think we got that 51% attack is currently a problem. Might not be a problem in the future, or might be a big problem if everything can be hacked with a quantum computer.
It's not a problem. It's a possible threat. And it's going to be a discussion topic, but technology changes very fast, and therefore you need to rediscuss it every year.
Okay, I think we covered the first question from the audience already. So the second question here is about stablecoins. So stablecoins are issued and they shall be value stable to some kind of fixed asset, usually like fiat currencies. So there's, for example, Tether, who is fixed to or pegged to $1. How do you guys see those ideas of a stable-coin? Is this a practical, is this or even a good idea, or is it completely unnecessary?
Actually, I have to add right away that not only asset-backed stablecoins exist, also algorithmic stablecoins, which don't have the assets by which they're backed, but instead their price is kept together by algorithm, which is issuing bonds and stocks on two sides to actually keep it within the 1 or 2% range. So there are different types of, and innovation goes on. So we might have new types of stablecoins moving on. But it's a very good question about stablecoins generally and the competition of stablecoins to Dash and Ripple and all the other cryptocurrencies.
Actually, I'd like to make an even more pedantic and annoying point. I hate myself for wanting to say this, but I can't stop myself. So the JPM coin isn't a stable coin. So a stable coin is, as you said correctly, is where the value of the coin is algorithmically maintained to be stable. When you tie the value of a currency to another currency, that's technically a currency board. But actually, JP Morgan's coin is actually within the EU regulatory definition, electronic money. It's not a stable coin. So there's an institutional link between the token and the dollar that's sitting in the JP Morgan account. That's not the same thing as a stable coin. So to nerds like me, stable coins and electronic money are different things. I told you I should hate myself for saying that, but I can't stop.
We've also seen these kind of things done before and not really take off. So for me, the JP Morgan coin it's old news. I don't envisage that this is going to be something that takes off. It's still a centralized thing. It's very much, you know, I just can't see it being something that is going to be
But wouldn't you agree that one of the biggest hurdles for merchants to adopt cryptocurrency for payments today is the volatility of the cryptocurrency?
Yeah, I would. And I think that there are specific use cases where cryptocurrencies can be useful. If you can get in and out of them very quickly, then yeah, definitely.
That's not the problem that the JP Morgan coin is trying to solve. Because it's not a stable coin. The point of the JP Morgan coin is, as I was saying earlier on, I have an app, smart contract. So if I have an app that wants to pay you, right? My smart contract can't do a wire transfer or use a credit card or whatever. I have to be able to transfer tokens to you. And that's the problem that the JP Morgan coin is solving. It's providing a token, but not in imaginary internet play money, in actual, US dollars. So
Unit of account, basically.
yeah, so it's solving a different problem. So whether it's successful or not, I couldn't say, but there's certainly a need for something that can do that, right? Especially once, because they want to start doing it between chains as well.
I can't comment on JP Morgan or Goldman Sachs or their projects. I think it's great that they're getting involved in the blockchain space, and I think the blockchain industry and fintech, it's a bit like Kevin Bacon in Hollywood. He's connected to every other film by a couple of actors. We're already connected. I like even the term stablecoin. Is it stable or should it be called pegged coin? I mean, if we look at pegging it to the US dollar, we only have to watch films like The Big Short or look back in history for other black swans. It's just another type of lesser volatility. But certainly stablecoins is a big topic for all of the last year, certainly in the people I've been speaking to. I think as a transactional electronic currency, it has massive strengths, because if we look at some of the legacy coins, the biggest one, Bitcoin, the more it's used, the more the price goes up and down. If we look at transactional currencies like the fiat currencies, there's stability, it enables people to transact a bit more. And I think the cross-border potential, it's significant with stable coins.
I think the JP Morgan coin is great validation for us all. I think that's the big takeaway for this, that we're working in a right market that's rightly so impacting some of the biggest businesses in the world. So we can take away that, yes, we're doing something right.
So there's another question from the audience. I'm asking if the JP Morgan coin is an IOU from a bank, and they've already answered that it is probably electronic money under the EU regulation. But elaborating on this point, which you also said that regulation is coming to the cryptocurrency space, do you see regulation as a positive thing or a negative thing for the blockchain cryptocurrency payment space?
Well, low quality regulation is a negative thing, and high quality regulation is definitely a very positive thing. Actually, just 2 years ago, I was chairman of a committee on digital economy in the Parliament of Lithuania, and been working on the regulation side myself. And if the initiatives taken today by European Parliament, European Commission, will actually be improved on in a way like PSD2 came as an improvement on the previous version, or SCA, or like 3D Secure on the previous version. If we actually improve fast enough, reiterate it, I think it's a very positive thing.
Dave?
Look, I think we all want to operate in regulated businesses. It's a new area. We want to make sure the regulation isn't overly restrictive. My personal feeling is that actually one of the things that the EU has got right on this, almost accidentally, is that we already have regulations, payment institution regulations, electronic money institution regulations, which separate the management of electronic money from the banking and the provision of credit. And that actually conceptually is the right way to go. So if we take those frameworks we already have and start building, using FinMart and things like this to bring tokens into that, I actually think the regulatory environment is really not that bad. It seems, because people in the cryptocurrency space, they're all programmers, they want everything done today, but it's just going to take time. But I don't feel anything negative about it at the moment. I think a strongly regulated token market, building on the existing EU frameworks, would be fantastic. There is a genuinely whole new business that can grow out of that.
Cassie, last words?
I mean, Ripple spends so much money working and hiring people to talk with regulators around the globe.
You can say lobbying, it's okay.
Huh?
You can say lobbying. We're all grown-ups.
we spend a lot of money trying to advise and understand the regulatory landscapes and environments, and that's a kind of key factor when we're launching our X-Rapid products. For us, regulation's a good thing. Being able to work with banks and financial institutions, you know, we have to be seen as doing the right thing. So regulation is
basically Benjamin is going to be the big winner out of all of this then.
Like always, the law is always win, no matter what. Okay, to wrap everything up, thank you for your patience and for listening to us. Today we learned that there is actually recent adoption of cryptocurrencies, that there are a lot of problems in this space, but there are solutions for everything of this, be it BitPay, be it Ripple, be it for privacy purposes, Dash, and that regulation will come to the cryptocurrency space, but that is not to be feared, something to be feared, but something to look forward to and to potentially influence so we get good regulation and not bad regulation. So thank you everyone for being here, and I wish you all a pleasant day, third day of the conference. Thank you.
Thank you.